All right, welcome to Drill Down Earnings. A quick look at the latest earnings from Analog Devices fiscal second quarter results. This is the business story behind one stock on the move. I'm Chief Market Strategist for the Futurum Group, Cory Johnson. Analog Devices, a really important company because it creates those foundational semiconductors that are part of kind of everything that we touch from industrial to automotive and beyond. Wall Street likes a beat or a miss, and yeah, this was a beat slightly across all the numbers. Here's the actual numbers, what the business did. $2.16 billion in revenues, operating cash flows of $4.3 billion, and free cash flow of $3.1 billion. We love free cash flow, especially when they use it for share buybacks. The company bought $675 million in repurchases or dividends, giving that money back to shareholders, if that's how you consider it. Now let's talk about the actual numbers. The numbers were worse for the quarter. Revenues on a year-over-year basis down 23%. And the operating margins also down to 18%. So what do we like? What do we learn from this business? And we'll talk about what we liked from the business and why the stock was up so much, because the stock was up, and I'll get to that. But the industrial business is still so very important to this company. 47% of revenues in the quarter, followed by automotive, communications, and consumers. Now we know that the cell phone business has been challenging, but we also know, really importantly, automotive has been a problem. Now, the decline in industrial chips has been a biggest problem for them because it's the biggest part of their business. But I thought what was super interesting in these numbers is the automotive sector, represented in the orange in the charts that I've put together, is starting to get a little bit better. And this is really one of the first times we've heard that from any of the suppliers to the automotive industry. That's really good news for Analog Devices and others. And their big problem of inventory is gradually declining. It's been in negative numbers. Their massive inventory, which was at one point over $1.6 billion in inventory. That's now down to $1.4 billion or some, $1.5 billion. So that's better. Better is good. Less inventory is good. But when the numbers came out, the company said inventory was better and getting better and better on the customer level. Stock really reacted. Stock up 9% on the day, a fantastic day, and a fantastic few days for this, such that the stock for the year is up 23%. Now, on the conference call, the CEO Vincent Roche was asked about what might be driving inventory and how they're managing inventory. And I thought it was really interesting to hear him say that they've tried to manage it so that they hold the inventory and their customers don't. And if inventory is going to pile up anywhere, they want it to pile up on their own shelves so they know what's going on. And they think that going forward, AI is going to help things get rid of that inventory, even in sectors like automotive and industrial. Check this out.
We've got a lot of inventory on the balance sheet. We've kept inventory closer to ADI, less downstream. With the, we've got as well a tailwind here from AI, which I think is going to be a multi-year tailwind. So we've got that pushing us along. But at the same time, we've got high interest rates. We've got still relatively high inflation in many places. So I think ultimately the size of the recovery and the pace of the recovery will have a strong economic and geopolitical tone to it. But overall, my sense is we'll see good growth for the remainder of this year and strong growth in 25. And beyond that, I think we've got many growth drivers that we feel very confident about. We're selling more value into each of our customers and each of our segments. I feel good about the place that semis are in as an industry right now as well, in terms of overall demand, as the edge becomes more intelligent and the cloud builds out.
So that sounds like a good indication demand is good for this year and good for next year and maybe good going forward because of all the drivers. The market's certainly like those words from Vincent Roche, and the stock is rallying as a result. But the one number that means a whole lot, the drill down earnings takeaway, the bite, I'm going to have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Analog Devices just reporting Q2 earnings. Here's an essential summary of what you need to know. The drill down earnings takeaway: $2.16 billion in revenues and $4.3 billion in operating cash flow. Just fantastic for this business. It's allowed them to buy back shares and give a decent dividend here. But the one number that means a whole lot, the drill down earnings bite, inventory is easing, but still not great. 137 days worth of inventory on the shelves at ADI. So Analog Devices has a ways to go before they burn through that inventory. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check me out on X at Cory TV, at Drill Down Pod, and TikTok and Instagram, and of course on the YouTube page of Futurum Group. Drill Down Earnings, part of 6.5 Media.